Hey everybody, what's going on? Jamie Saettele here. It is September 7th, 2016. Big week for the markets, ECB tomorrow. And I'm not going to sing because my voice is just, I have a terrible singing voice. But you know the song, The Final Countdown by Europe? Um, I think it's appropriate for the Euro right here, right? We're at the final countdown for this analog and I think this entire consolidation that's been underway since March of 2015. This is one of the longest consolidations in the history of the euro. And again, what that means going forward is that once we do get a break from the consolidation, we should expect to see a pretty substantial trending move. Okay. Again, all the work, the stuff that I've done with the dollar cycles and whatnot over the last, really throughout the summer, suggested to me that this move's going to be higher. I know that has not been a very popular opinion, but it's, I still think that's what's going to happen. So again, this is, tomorrow it says, if the 98, the analog continues to unfold, we should basically be making a low tomorrow. Okay, now, as you know, I had an order to buy into today because the charts, the near-term charts did suggest that if we got to 111.90 that we'd have good support there. Okay, as you can see, this is the chart from last night. 111.90. It's not going to get hit today. Or unlikely that it gets hit today. In fact, we have come off of resistance, right? The former channel support line. So we have come off that a bit. This is a high volume level actually from 9.6. That's yesterday. The NFP level is right here. Actually, there was not, and this happens on occasion when you have really, big, events that are kind of on either side of, of the NFP release. Sometimes the NFP release itself is actually not a high volume level. In this case, you can see it was not considered a high volume level because you had Jackson Hole, just before it. Okay, and then yesterday we had a big move higher as the dollar got just totally obliterated after ISM. So just be aware that, a lot of times as we get into the beginning of the month, I'll reference the NFP level for positioning purposes. And this month, it's not really going to be the case because there weren't many important NFP volume moves this NFP. All right, so getting back to the euro, I don't want to overcomplicate things. Tomorrow, the release for ECB will be at 7:45, and then I believe there is I don't see it on this calendar, but I do believe there's usually a press conference with Draghi at 8:30 Eastern time, New York time. Either way, on the chart, the 111.90 area is not really the level that I'll probably I should say not completely, but probably not the level I'll be watching. I'll probably be more interested in, it could be down near 1180. Again, just this trend line here. It could be down at a new low, okay, as per the analog. So there's really no sense in actually trying to, predict I guess you will, what where this is headed tomorrow during ECB. As we see during lack of these liquidity events with ECB, we've seen some just crazy moves over the last year plus, and you can get a couple hundred pips in a few minutes and then fade the whole thing and go up and double that. I mean, it's kind of stupid to even try to sit here and talk about it right now. So just know tomorrow, the first move is often the good one to fade. I am looking to buy euro, and it could be on this line, or it could be at a new low. There's can't really be that specific when you're talking about the ECB coming out. But what I think is going to happen, I do think that we get basically to the mid 120s plus over the next couple of months. The risk level for this, I'd put it, probably 110.45 or so. Hopefully we get cleared up tomorrow. All right, I might do some more analysis tonight on euro, but as it is right now, anyone's guess as to how the market reacts heading into this. Want to buy weakness though. That's pretty much it, right? And that's kind of the deal with any dollar pair. I want to, for the most part, sell strength. Are we finally gonna get into the breakdown? It's been a pretty hellish end to this consolidation period, right? Just when you think you're going to break down the dollar, you get Brexit. You think you're going to break down again, you get Jackson Hole. Jackson Hole's almost been completely retraced. I mean, you had the spike low down here. So Yellen's comments came out here, and then some other Fisher said something, and you get this move here, and the whole thing gets retraced. So the way I'm looking at this, as I wrote last night, is that you've got basically a flat pattern, right? A, B, C. Okay, and flats are really, I guess, kind of the most diabolical patterns out there, simply because you get two false breaks in the pattern. Okay, you get an A wave, you get a new drop in B, but the B wave goes below the origin of wave A. Okay, wave C rally takes out the top of wave A, so you have an expanding range. At the end of the day, you don't go anywhere. Okay, so what makes me bearish? Well, a lot of things, as I've noted. You got the cycles. You've got 1, 2. You got a 5-wave drop from the high. That's impulsive. You got a 3-wave rally, clear as day, from the low in May. All right, and that's most of that rally in C is Brexit. And then you've got another sharp decline, and then another correction. So, everything is pointing towards basically being in the very bearish C wave or third wave position lower within the sequence that started in January. And that's another very subtle, another very subtle thing, I guess, that I'd like to make a point on. Okay, and that is the fact that euro. Let's see if I can hold on here. Euro's made its low so far. 2016. We have so far made our low on the second trading day of the year. Okay, right here. That's important because, when you make a low in January, okay, and you hold it for this long, the probability is that you end up making the opposite price extreme in December. Okay, in other words, you're in an uptrend, low at the beginning of the year, high at the end of the year. The opposite is true when you make your high in let's look at 2015 2015 for example. 2015, euro made its high on the first day, okay, first trading day of the year. Okay, now we made a low in March, although we ended up making, kind of retesting it back in December, same idea, right? So in other words, basically being short from January to December, okay? This year's the opposite situation. Obviously not where this is a trend, and since then we've been sideways, but you get what I'm saying as far as the whole January trend idea thing. All right, so let's move off of euro just because, look, I mean, I don't have a ton of insight to offer right now. I like it higher. The dream scenario, I guess, from this standpoint would be actually if you got a nasty 100 pip or so decline right off the bat, to a new low, which, 100 pips, I mean, that's not inconceivable, right? It's probably pretty realistic. 100 pip drop right off the bat below the lows, and then you fade that for the final low. Stops below 110.40, okay? This is critical, even though I, have got all this analysis suggesting that we're going to go higher. If you don't use stops, I mean, you're going to fail at some point. Question's when. All right, here we go. So yeah, we're basically looking for support if we got to a new low, maybe 111. You do have a slope line there. Okay. And then 110.40 stop. And then eventually we could be on our way up much, much higher. All right, so let's go to pound. Cable is off pretty good today. Basically retraced. It looks like almost all of yesterday's move, have we not? Just about. So I was noticing last night when I was going over the charts for the post, again, look, remember we were long cable and we got out here when we dipped, wanted to get back in at 30.20, but the slope that we had was never reached, right? So what we're going to do here is a quick review. And this is the slope that we were following, right? We had this beautiful touch right here on the median line, the pullback, and we wanted 30.20, right? Because 30.20 would have been basically the lower parallel. And I think what we have over here, we had something over here, didn't we? Oh, these lows. I was kind of looking for us to take out these lows and then go higher, right? Well, that didn't happen, and we ended up bottoming actually a little bit above 130.20, is more like 30.60, okay? Which, in hindsight is a pretty good, well-defined price level anyway. I mean, you've got 30.50s right here as lows in July. All right, so this is an inside day here. To me, this is nothing more than just a pullback, and this slope still might work at some point. Okay, but what I'm looking at here, if you notice yesterday's slope, it was a little different, right? We have this, and if you connect there, you get obviously a good channel. But what is really interesting, there we go. What's really interesting is that if you take this off the low, it's essentially the same slope as the trend line, right? Off of really the low day from July 6th, and then of course July 11th. Okay, there's even a little resistance there on E5. So with that, I'm wondering if maybe this is the right thing to follow at this point. Okay, and then we can throw in, of course, this trend line here, this trend line here. Now this one might be a little deep, right? To get all the way back there, if you're getting all the way back into, mid 131s, I guess it's possible. But my next move for pound, so here we are. This is the chart, your chart from last night. We're pretty much into support here, right? This is the line from kind of your neckline back in the day. Week open 32.95. Okay, good congestion lows there. This is a 4-hour chart, by the way. So I'm kind of looking for cable to stabilize here, or pretty soon. Maybe look for European low or something for Thursday morning. But given the extent of this drop, and it does have an impulsive kind of nature to it. I mean, just look at it on an hourly chart. You can see kind of a 1, 2, 3, 4, 5. So what I would actually be looking at is for resistance. You get a pop, maybe get a resistance around 33.75 region. Okay, former high up here. So again, the drop might not be done. You might come into 32.88 or so right here. Okay, get a pop up into 33.75, and then get one more leg lower before you get the opportunity to really buy the dip. So I mean, I guess if you're looking to be real active, there's probably about three or so different opportunities in here. One would be look for a low, between roughly here and 132.90. The next one would be to look for a high or sell into resistance at 33.75. Okay, but the bigger swing opportunity is to ultimately probably look for a low down after a 3-wave drop from the high. Okay, so if we can complete that 3-wave drop from the high, let's just say for argument's sake that we go to 32.88 and we get a move up to, that would put you 2 equal legs at about 32.15, which would put you down near trendline support. What is this? Would put you down near trendline support early next week on Monday. Okay, so we might be in for somewhat of a range period with pound dollar, and maybe the dollar generally over the next few days, right, as we correct yesterday's kind of smash on ISM. All right, so pound dollar, I still love this idea as far as playing dollar weakness. Cable may have gotten a little overheated. It's not a coincidence if you look at, say, the scans, for example, that you have seen. And why did that do that? It should be logged in. All right, it's weird. If you look at the scans on the updates, you can see that there's a lot of pound extended advances going on here, right? So pound CAD, pound yen, pound Swiss. There's Kiwi and Aussie as well. So yeah, it's a pullback from here should not be anyone's surprise. In fact, I'm happy that it's happening, because if it would have continued to go higher and just gone on one of those breakouts that no one gets on, it would have been kind of annoying, right? Because we've been following this, and we we're out at a good price here, but then never got back in. So whatever, I hope that gives you some good ideas as far as pound dollar. We'll look at pound yen here in a little bit. I want to continue with the dollar crosses though quickly. Aussie dollar, I thought this was interesting. So we got into this is the gold. You see the gold lines, right? Look where that high is today. We're right on it. We got into the resistance, right, from our old slope lines, our old friend here, right? And if you recall, of course, this was resistance way back in April. It was also resistance in August, and that was just, a complete disaster of, an ugly, ugly market there, for a week or so in 2 weeks really in August when you continue to spike all over the place. Jackson Hole, same thing. I mean, it's been nasty. So I'm wondering if, we were looking for 73.80, right? Before we really took off on the upside. Well, here's this trend line, okay? Now check this out. I want you to pay attention to two things on this chart. This trend line, okay, the one off the highs from 816 and 826, which is Jackson Hole, okay, and then this 50 line, okay, of the pitchfork, the broader pitchfork. Hold on, this thing's misplaced. All right. Okay, the 50 line here, okay? That 50 line happens to line up with the 822 low in the weekly opening price. All right. Now, here's the near-term chart. Here's that same line, gold line, okay? So two levels here. 76, really about 35 or so is right here, okay? And then ultimately, it might be the 75.80s, right? Which ends up, providing, here's the 50 line right here, which ends up providing support for entry at some point, again, early next week. All right. So, I have a short position here. I had to stop at 77.15. Last night I had put to get out, adjusted the order to get out of this trade at break even because, we had an employment figure, you take advantage of what happens, right? GDP come out, and if GDP came out and you got a spike lower, I figure you're going to see support there. Well, we got not really a spike lower. The market came off a little bit, didn't really do a whole lot, and we've actually reversed here. So see how this, works out towards the end of the day, but I might actually end up just taking that target out and moving it down here and looking to see if we can get somewhat, kind of lucky and get a pullback down into 75.80s. And, I'd then be looking to actually flip to the long side at that point. All right. 75.80s is a pretty good looking price level. Okay. So, something to consider there with Aussie. Kiwi is just a complete beast, is it not? And look at this thing here. Okay. So we actually have tested the 2012 low. It's 74.55 today. I'm not much of obviously, as you know, I'm not a fundamental guy, and here's why, actually. Let me send this out to everybody. So, let's see. Did everyone see that? Try to send an article. This is from, anyway, this is from, I guess, in the newspaper here today. And you've got a housing kind of bubble going on in New Zealand. Now, the thing is, people have been talking about this forever. Okay. So, the timing's kind of important. Well, if people start to actually realize this, and if it actually starts to burst, then obviously there's going to be, plenty of rate cutting in New Zealand. Now, we could be a ways off from this, but this would be the story that actually happens and why the Kiwi ends up getting smoked. And if the market realizes it and actually starts to fall ahead of time, which sometimes it does, then you might actually see Kiwi trade lower. In the meantime, I really have no interest in talking about Kiwi until it starts to make sense or do something. But hey, would be worse places to reverse than here. But in the meantime, not really much of a trade idea for me on Kiwi. Okay. Dollar CAD kind of playing according to script here so far today. Last night talked about the in the post talked about the trend line, okay, that we had going on from just the May low and the August low, and that trend line, is kind of confirmed today with this rally. So we have held, if you recall, that a parallel to that line was actually decent support and resistance. And in fact, if you were to draw, a fork with that, you actually got the median line, got the high. Okay, so it's a pretty good slope to work with. Near-term resistance was thinking 29.20s, got pretty close today, 29.13. If we go into the hourly picture, you've got a very clean impulsive decline here. So the measurement, check this out, 618 is actually 130.20, okay? That is the NFP level, 130.20. And of course, 130 is the former lows. So 130 to 130.20 might end up being yet another area for CAD to trade up into. All right. I would be watching, at this point, though, over the next day or two for resistance, probably up near 29.20, maybe support down near 28.80. 28.80 is actually the Jackson Hole level. Right here, it's a big level, okay? So yeah, not really, much of no plan really to put on any sort of a position, for me at least, in CAD. Okay, you might end up trading on this slope. Notice how we've bounced from the median line, okay? So you can see that over the next, what is this? I guess on Friday, you do get a 29.40 confluence here. And there is a decent amount of risk as far as the Canadian dollar is concerned, and event risk, I should say. You've got CAD unemployment, okay, so CAD jobs data, it's like their version of NFP, right? CAD jobs data comes out on Friday at 8:30 New York time. Tomorrow you do have the gas and crude inventories. It's on Thursday because this is a holiday week, and so when there's a holiday week, it gets pushed back a day because government offices are closed. Okay, so again, not looking to put on any sort of a swing, but good levels for for kind of scalping off of, I think, for CAD over the next day or two. Specifically 29.20.40 for resistance and 28.80 for support. And obviously, if you're going to be buying it, you've got a pretty clean stop area at 28.20. Okay, so there's that. What else do we have going on? Dollar Swiss. This range continues to tighten. I have no desire to trade it, but you have hit the 618 of the latest rally today. Okay. If I look at a 60-minute chart of this, got a 3-wave down right here. So I guess you could make a bullish argument, but it does not jive with what I'm feeling on the dollar generally. I mean, it's just sideways since May, right? Look at that. You have had good examples of the daily reversal and support levels with dollar Swiss lately. 98.58 daily reversal resistance here. Support back in May, or the close for May was support twice actually, on 6.23 and 8.18. But yeah, no desire to really do much with dollar Swiss at this point. Dollar yen. So dollar yen, We had 104 marked, and I noted on Twitter to be careful that Friday high, and this is exactly why. Friday highs, never buy a Friday high. This is why you don't do it, right? Friday high ends up being the high, and we got dollar yen just got totally murked, then got slammed here. So if you recall, I was looking for 101.79, 102.14 to hold. On a closing basis, we could end up holding that because we're at 101.82 right now, traded all the way down to 101.17. So again, why are these levels important? Why am I looking at as I said, 101.79 to 101 or 102.18? 101.79 to 102.17, 624 low or close. That's Brexit. BOJ close here is 102.02. That's BOJ, and then Jackson hold is 101.79. So all three of those days, those are the big volume days, and they all, close within a pretty, 20, 30 pips of each other. You've got, again, 101.79, 102.02, and 102.14. Okay, so what does the short-term chart look like? Again, be careful. You do have, there's BOJ coming up in, I believe it's next week, but as we've seen, you're going to see all kinds of rumors come out ahead of it. This latest drop, for example, was apparently because of some article that appeared saying they're not going to ease in September or whatever. You can't really pay attention to these things. I can tell you that we've seen this stuff happen before. For example, just last December, right, a week before. Or sorry, it was the end of January, a week before they went to negative rates, Kuroda actually came out and said that they would not do negative rates. And then like 4 days later, he did negative rates. So, it's silly to even listen. I actually think that a lot of it gets lost in translation and people don't really understand what they're listening to. But for dollar yen, here's the short-term chart. So looking at the trend line here, basically this former trend channel, right? Remember that line, this one here was support before we rocketed, and then we went, tumbling through it. And I would actually look at it now to potentially provide some resistance in the near term. And it's right around 102.20 tonight. Now, if you get through this level, I'd be willing to turn bullish, okay? Dollar yen again. So, above here, kind of 102.20, which again is also the end or the Brexit day close is 102.14. Up through there, I'd be willing to kind of be a dollar yen bull, generally speaking, which leads me right into pound yen. So we're at this support in pound yen. Real quickly, hold on real quick. I want to show you something. We've actually come back to below where we got out of the long trade. So we traded up to 138.12, and here's another example of daily reversal resistance. Okay, the high day right here, 138.12. Guess where we closed on the high? 138.14. Okay, the high was 38.80, but not bad, right? So again, that was Friday. Friday high. We've come off. We're back, basically right at where we opened the month. This is support. You could hold here, let's see here, like pound dollar. You might end up getting a move higher off of this, but fail before you go lower yet again and get a three-wave decline from the high. Okay, if that were to happen, I think what you're probably looking at would be more like seeing this line, the one I just connected here, probably that one end up providing support, okay? So we'll see. I don't have an entry here yet. I want to be long pound yen, that I know. I just don't have a an entry quite yet. Okay. All right, that was pretty much it for me as far as what I was going to cover FX wise. There are, as you can see, it's at this point, I am broadly speaking on wanting to trade from the dollar bear side because I think the reward is significant, and it certainly outweighs the risk. But there are some exceptions on the short term stuff. And it's not all one, one size fits all. I mean, Kiwi up here is a big level. Okay. Not saying it can't pull back. Aussie, I think it can pull back and then go higher, right? Dollar yen, its own thing. Willing to kind of treat that as completely separate. Dollar peso, let's take a look there. So dollar peso, we have come into resistance. We actually were triggered on the short at 1840. I'm looking down towards 1785 or so. And yeah, this is one that I like, lower, I guess, right now. So, this is a well-constructed idea. If you recall, we've got the peso analog has been one of the better ones, really. Remember, we were looking to be short for a while, and then I refrained from from getting short earlier on because this warned that we would hold up until the end of August and the beginning of September. Sure enough, we did. We did hold on, and hopefully this continues, and we're on our way towards lower levels, and in fact down, at least below, the lows from August. It may be something more. Okay, you have the possible double top. Not sure that would actually play out and reach its target. A lot of these patterns don't end up reaching their target. This is a good example. The market that we're comparing to, actually, all the way back in 2011. Back then, right, you had the double top. The market broke its lows and then found a low, right? So we could get something like that here, but we're looking way down the line at this point. The S&P 500. What is there to say? We haven't done anything since like July. I mean, it's just a complete quiet. I don't know. It's like the market's hijacked and waiting for something. There's really nothing to say here. I guess you could eke out another high. If you do, I'd look at 2190s as resistance. The gold market was thinking we would finally get down into that support in the 1270s, 1260s. We turned up sharply just this week, right? And here we are now testing 2011, 2012 trend line again. I put this on Twitter earlier, but 15th time we're trading at this trend line since July. And the better metal right now, technically, is silver. Silver has been just beautiful. You can see the median line here, silver, right? We found a low here at the very end of August. We've turned up, extremely sharp. And guess what? Resistance just at the upper parallel again. Okay, that was support actually for a time in the summer. In fact, silver actually looks, remember the gold analog we were looking at? Silver looks more like that gold analog. This is what I'm talking about. Hold on. Wrong chart. Okay, so this was the gold analog. We did get a drop. We suggested 830. The low was on 831. We've turned up, but gold has basically not moved, right? It's been very quiet. The volatility has been very contracted. The range has been contracted. So if we check this out on a silver chart, one, two, three peaks. Let's see. So this peak with this peak, well, it does not match up that well. Matched up with a low, but you can see the idea of matching up basically the peaks, right? So one peak, second peak, third peak, right? And then you kind of then it sells off sharply, okay? And then that's the correction, and then it goes on its merry way. Ends up kind of making actually a continuation head and shoulders pattern with an abbreviated right shoulder. So point is, if we are going higher in silver, basically look for support around 1920, okay? You can see how well these slope lines have worked with the median line, okay? The 50 line here, really the 75% line, right? 25, 50, 75. We darken those up, right? That was resistance back here in April. And, we've seen these things come back in play, so it might be in play again. All right. Okay, are there any questions? I don't have a ton of stuff to really cover today. Kind of wait and see here with ECB. I mean, the plan as far as wanting to buy into euro, weakness. There's some good short-term levels, I think, to scalp in dollar CAD as I went through 29, 20, 40, 28.80. Maybe dollar yen 102.20, but the rumor mill with dollar yen, not really one of the places I prefer to operate in right now. Pound dollar 133, 132.88 looks real nice for a long position, but then you might actually get resistance at 33.75 to take it lower for one more leg before you can get the bigger move. Aussie, I would watch that 75.80s for the big support, but probably not till next week. 76.35 looks like it could be support in the very, very near term. Okay, well, if there are no questions, then I'm just going to wrap it up. Don't be shy, ask questions, and I'll be more than happy to answer them, obviously. Okay, all right, Adam, thank you so much. Adam with some nice words there. Biggest thing for tomorrow, right? ECB, obviously. We could really be at a big turning point September 8th if this analog works out. I'll fly out of my seat. All right, so again, take care, everybody. Have a great rest of your week. Get some sleep, get up early, get ready for ECB. You know what they say, early bird gets the worm. And we've got a lot of worms to catch tomorrow. All right, have a good one.